How the Republicans caused the stock market crash of 1929. What caused the stock market crash of 1929? Why did stock prices literally collapse in October of 1929? Was the market to blame? Were markets fundamentally unstable? Was capitalism at fault? In How the Republicans Caused the Stock Market Crash of 1929, General Purpose Technologies, Failed Transitions, and Commercial Policy, economics professor Bernard C. Boudreau presents a radical theory of the stock market crash of 1929. He argues that a failed policy measure in the form of the proposed Smoot-Hawley Tariff Bill of 1929 was responsible for this cataclysmic event. His line of reasoning goes as follows. The early 20th century witnessed a technology shock that increased potential output by over 50%. The electrification of the U.S. economy raised potential output. Income and expenditure, however, lagged behind, owing in large measure to the fact that wages were rigid and profit income is a residual form of income. Higher productivity failed to be translated into higher income and expenditure. Boudreau refers to this as the concept of under-income. Ranking Senate Republican Reed Smoot of Utah, chairman of the powerful Senate Finance Committee, acknowledged this problem and proposed a solution in the form of yet another round of tariff hikes. His idea was simple: raise factory utilization rates by closing the U.S. market to foreign imports. This became the main economic platform of the Republican Party in the 1928 presidential election. Herbert Hoover was elected on a platform of higher tariffs on manufacturing. Stock prices soared on the news that tariffs would be raised, and U.S. producers would enjoy greater sales. Not everyone agreed. Democrats opposed higher tariffs on manufacturers. But the key element in this story is a group of Republicans that became known as the insurgent Republicans. These were Republican senators who vehemently opposed the proposed tariff hikes. Ignored by Smoot and the Republican establishment, they broke with the party in July of 1929 and joined ranks with the Democrats. The insurgent Republican Democrat coalition vowed to lower, not raise tariffs. Smoot felt that their concerns could, however, be addressed. Investors were less hopeful. On October 21, 1929, the very day of the first stock market crash, the insurgent Republican-Democrat coalition won its first victory, reducing the tariff on tannic acid. The writing was on the wall from that moment on. Smoot's plan to firm up product markets was doomed. Investors realized this. Stock market prices collapsed. Interestingly, they returned to their pre-tariff policy level. In other words, the market had simply factored out the anticipated gains from the higher tariffs. Hence, according to Boudreau, the market crashed as the result of an inconceived-of policy measure. Had the Republicans not chosen tariff policy to address the problem of underincome, there's every reason to believe that the stock market would not have crashed. For more on this, get How the Republicans Caused the Stock Market Crash of 1929, available at all good booksellers and Amazon.com.